Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name's Marc Freedman.
And I'm Marion Gilman.
And it feels like forever since I've been here.
I think it has been forever. Yeah.
I know.
Christian and I have been holding down.
I'm sure. And I understand some of these podcasts have been really, really good.
Oh, yeah. Well, what can I say?
I know. You guys are more talented than me, that's for sure.
Sure.
And
I don't think so.
You guys nail it. So here we are approaching the end of April. And we
I think this is it. Last day.
Oh, today is the 30th. So today is
last day of April.
When you see this, it'll be May already.
Right, exactly.
Actually, when you see this, I might be 60.
Ah!
Yep.
Yikes.
Yeah, I'm turning 60 next week.
Yeah,
or the week you're seeing this.
That's right. Wow. Yep. Big milestone for Marc this year.
But what's kind of interesting is, not because of my birthday, but...
And you don't look a day over 59.
So that's right. See these bags under my eyes? It's terrible.
You need some sleep.
I think I do. At any rate, we once a quarter we host a webinar with our clients. We do it every 90 days or so, and we get anywhere from 50 to 90 people to join our webinar to hear what's going on in the world. We share some of our perspectives from some of the people that we've been talking to, update you with things that are going on.
We get a lot of information from some of the analysts that are at the mutual fund companies that we deal with. So we try to convey some of the important facts to the clients during these quarterly webinars.
But if you remember, maybe by the time you're watching this, maybe 40 or 45 days ago, it was actually March 23rd. We did a special webinar because we decided we weren't going to wait.
Yeah, because the market was really... had really declined at that point, very significantly, very quickly.
And let's put things into perspective. It declined, yes. It was off 8% from its high of, a month prior to that. The market had been up about 3%, 4% or so from the beginning of the year. But Marion, what was the reason for the market being off?
Well, the market was off because of the war in Iran.
Right.
And, oil prices started to rise and, just all of that reverberated through the economy. And, when that happens, it just happens quickly and it's unexpected. They call those black swan events very frequently. But nobody could have anticipated this. And so all of a sudden, when you just see a steep decline quickly, we have seen those over time, but when it happens in such a small amount of time, a lot of people just get very nervous.
And you can blame everybody, but it starts with the media, it starts with social media, it starts with, the notifications we get on our phone. Everything gets exaggerated.
Absolutely, and blown out of proportion, and emotions take over.
They do, and we end up and. I wish more people understood how algorithms in social media work, because the more you sit and read a story, the more in the background an algorithm is thinking about, well, can we give them more information that supports this story that they're reading right now? Okay. And so our opinions on what's going on become, they could get confirmed rather than understanding all the different opinions. So when that happens, there's uncertainty. And markets hate uncertainty.
Yeah, it's more than just the decline in the market, the uncertainty of what's going to happen next. And everybody, I think, unquestionably, has the same philosophy where your expectation is that what has happened in the immediate past is going to continue into the future, both good and bad. So when the market has gone up for several years, all the expectations are just, well, it will continue to go up. It will not go down. That nothing could be further from the truth, but it's random. And you need to remember it's random.
It is. So the market went down rather rapidly over a 2 to 3 week period of time, not even that much actually, dropped 8%, which in the whole scheme of things is really not a big deal.
Very minor.
But when it happens that quickly and that much of a surprise and that much of a shock to people, and you get it supported by all sorts of perspectives in social media, people react. And so that's where we held that meeting back in March 23rd.
Right. Yeah.
So now let's fast forward 30 days. And we just did another webinar. And not only has the market made back what it lost, it's actually higher. It's gone on to all-time highs. And Marion, how many days did it take for the market to get back to where it was?
Yeah, amazingly, it was 11 days from that low point that it had reached to a new all-time high, which is, again, a remarkably speedy recovery.
Right. And the conditions overseas, I don't know if they're that much better.
They weren't.
Right. Right. I mean, oil isn't moving through the Strait of Hormuz as we have this conversation with you.
Right.
There is still tensions between the United States, Israel, Iran, and other nations.
Yep.
In fact, yesterday, the UAE decided they're abandoning their connection to OPEC.
Right.
What that all means in all details, frankly, I don't know, but it's newsworthy. Still, nothing has changed. People still don't trust the president. People are very, very polarized in their political opinions on everything. It doesn't matter what good happens in the world. Even if the president did something good, 50% of the population is going to say it's no good anyways. But we all are polarized. Nothing has changed, yet the market is back to where it was.
And guess what? The economy is still doing well.
It is.
It just keeps, chugging along.
But wait a second. Mary, you just said the economy is doing well and the market's moving along. But if you read the newspaper, well, does anybody read the newspaper? If you look at your phone or watch the news, all the reporters are telling you that the economy's horrible.
You need to read past the headlines.
What? I don't have time to read past the headlines, Marion.
You gotta.
Oh my goodness, that's the problem. So
Right.
the headline is gas prices are over $4.
That's the headline. Guess what? We have seen over $4 gas prices in the past.
And I thought it was funny. I mentioned this to you yesterday. We were in a meeting that I was driving to work, listening to 92.5, the radio station where we advertise on. And the DJ is talking about, some news headlines. She says, well, news reports are showing, as you're well seeing, that gas is above $4 a gallon. It's the first time in 3 years since we've seen this. Under the Trump administration, it's over $4 a gallon. But 3 years ago, it was the Biden administration where it was over $4 a gallon. But she didn't want to mention it was under the Biden administration. She just said it was in this Trump administration. Now we got $4. So you're setting the standard. And here's what makes it even worse. And from what I read, it doesn't look like prices are going down anytime soon. That's what she says. You're a DJ, and people are taking your advice as a DJ.
Wait a minute. And she's supposed to be reporting news. Is that correct?
I don't know what she's reporting. She's reporting how she feels.
Yeah, exactly. I was going to say, this is not reporting news.
Right.
That is an opinion.
I mean, I just think when gas prices were over $4 just 3 years ago, it was less. We had lesser of a handle as to why gas prices were that high than we do now.
Other than the fact that inflation was 9%.
Right. Inflation was up, but I know why gas prices are high. And frankly, as I look at this, assuming things get settled out in Iran, we're going to get back to normal.
Absolutely.
Those prices will come back down.
But what's normal?
I don't know.
Yeah.
But,
I mean, we've seen much higher gas prices in the past. I remember paying a lot more than what I did the last time I filled up my tank.
So now we've moved on to the month of May. And
month.
The expression has been, the historical expression is sell in May and go away. Well, should we take that advice this year, Marion?
I don't think so.
Why not?
Well, I got to say, and this has happened with a lot of these old expressions. So back in the day, everybody would say this, sell in May and go away, meaning get out of the market, take 6 months off, and get back in. And the rationale behind this, there were a couple of things behind this. One was the weakest months historically in the market were May to November, and November to May were the strongest months in the market. So, that was great. It worked for a long time. There were other caveats like this. For instance, in January, small cap stocks historically went up because they did really well in January, and they used to call this the small cap effect. Well, the January effect, I'm sorry. So, but you know what? All of those things, once they're realized by the market, any advantage goes away. It disappears. So over the past 12 years, sell in May and go away has not worked. It did work for maybe 20 years before that, but everything changes. Remember, people are out there, researchers are out there all the time looking for these small little hints that they can take advantage of, or tips that they can take advantage of and beat the market. They really can't. And as I said, it just disappears.
Yeah, I mean, look, what sells is speculation.
Right.
That's it. And I mean, I was talking with my son, Jerry. He was down in Miami, and he said he has a neighbor that sits on the front porch of the place, and he has a Robinhood account. And Robinhood is what all the younger generation is doing right now. They want to buy and sell and play option strategies and leverage this, and they're making so much money, okay? They're really not. That's number one. The guy that's sitting on the front porch, he has a portfolio of 30 stocks that he actively trades. 30 stocks. And he figures he's going to figure out how to beat the market. That's what he does. He listens, he reads, he gets all this information, buys and sells, buys and sells. His whole portfolio, $25,000. $25,000.
That, can you?
And he says, he's got like $400 or $500 in a whole bunch of different stocks. And he's hoping that $500 will turn into $5 million.
Wow.
What?
That's a magician.
Yeah,
That's
that is like ridiculous speculation.
Right. And that is not investing. I mean, I think we really need to say that when we talk about investing in the markets, that is not investing. That is speculation and trading. Right. I mean, nothing more.
That's just like going, to a basketball game or using any of these online betting apps and doing that. I mean, it's just insane. But there is a growing segment of the population that relies on that online Robinhood account or some of these easy to trade accounts where you don't care how much Tesla or Nvidia or whatever the stock is, whatever their share price is anymore, you can now buy dollars of a share, which are amazing. Fractional shares.
Right.
And you're just trading on this all day long.
Right. And you never were able to do that. You had to buy whole shares, like one share. And when the stock price is $1,000 and you got 25 altogether, you want to put that $1,000 in 4 stocks, maybe. You couldn't do that.
Yeah,
now you can.
So when Kramer or one of these newscasters say, hey, I like this stock or I like this stock, anybody can buy it on their phone now because they can just buy, I'll put $30 into this stock. I'll put $50 into this stock. It used to be you needed to at least buy 100 shares, probably even more than that, to make it worthwhile. It's changed. It's not changed how we do it here, but it's changed in the younger generation. So this idea of sell in May and go away is a strategy that a lot of traders will still employ, but investors do not.
Never. That's very true.
Right? I mean, it's amazing how the world has evolved. And I think as we've grown in this business, Marion, we have learned that understanding where everything is and what everything is worth helps to make clients and us better decision makers as it relates to your overall financial plan.
Give some clarity on where you are, what's available to you, and how to reach those goals that you have for an enjoyable rest of your life, however long that might be.
So if there's any lessons to learn over the past 4 or 5 months this year, is ignore the headlines. Don't get threatened by the notifications or the extreme content that you might get from friends, neighbors, and relatives, and maintain a long-term strategy. because over time, the things that you can control, like the way you spend your money, the way you go out and live your life, is the stuff that's going to give you the results that you need. Focusing on the stuff you can't control can lead to a very, very rocky road.
And be rational in emotional times.
And that's what we call financial advice in a language you can understand. That's going to do it for us this week. But if you would like to get our free weekly newsletter that includes our podcast, it includes stories, it includes little stories about financial advice in a language you can understand, go to our website, freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. Go to the bottom of any page, put in your name and your email address, and you will join the 7,000 plus subscribers that get our newsletter every Friday morning at 10:30 Eastern Time. That's going to do it for us this week. We will be back with more dollars and cents and more financial advice in a language you can understand next week. Have a great day. Bye-bye.
Enjoy.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.